Alright guys, so welcome back to Accurate Pips, and we are continuing with our training that we started about a month and a half ago. So you are welcome to this new lesson, and in today's lesson we are going to continue with our liquidity lesson that we started. So already we've talked about what liquidity is. We've talked about retail liquidity. So today we are going to be looking at what we call smart money traps. Okay, smart money traps. But before I get into the lesson, if this is your first time here on Accurate Pips, do well to subscribe to our YouTube channel because all the lessons have been posted on the YouTube channel. So do well to subscribe to the channel. Also like this lesson video, share it, and leave a comment below. If you have not joined our WhatsApp page, our Telegram page, there is a link in the description of this video. Also, don't forget to sign up with Deriv because they are the one that are sponsoring this particular course that I am offering you for free. So guys, do well to sign up with them. The link is in the description of the video as well. And if you have not watched the previous lessons, I will advise you to go back and watch those lessons before coming to this particular lesson so you can get the concept, because the lessons are intertwined. Okay, each lesson leads to the next lesson. So do well guys, do well to watch that particular playlist. Okay, all right, so let's come back to the lesson. Okay, now what is SMT, okay, or smart money traps? Okay, what we call smart money traps. It's a very interesting topic because a lot of supply and demand traders get caught up in these traps, and then the smart money guys who understand liquidity are able to use those opportunities to make money out of them. Remember, we have learned a unique way of marking structure, okay, and we have also learned how to identify valid change of character, valid break of structure, and IDM. Okay, now smart money traps has to do, or is a special type of liquidity, okay, that has to do with invalid break of structure, invalid order blocks, invalid change of characters. Okay, so people say they are trading SMC. Okay, there are a lot of people who say they are trading smart money concept, but then they are doing it the wrong way. They mark structure the wrong way, they mark change of character the wrong way, they mark OBs the wrong way. And remember, I took my time to show you how to mark OBs correctly using both the single candle order block method and then the order flow method. So if you have not watched the lesson on order flow and order block liquidity, then do well to do so, especially structure, how to identify the correct structural formation in the market. Do well to watch those particular lessons. The videos are in the playlist. I'll leave the link to the playlist in the description of the video. All right, so one thing you need to know is that not all OBs are valid OBs for trading, and not all break of structure are true break of structure or valid break of structure. Same apply to change of character. Okay, so true SMC means that you are identifying levels of liquidity first in order to identify high probability point of interest in the market, okay, before buying or selling. Okay, now as a trader, okay, one thing you need as a smart money concept trader, one thing you need is, if you are you need to know is, if you are selling or buying without inducement and liquidity sweep, then you are part of the SMT liquidity. Because if you are buying from an order block that is located below the inducement in a bearish trend, then you are trading on an SMT. Okay, same way if you are locating an order block that is above the IDM in a bullish trend, then that order block that you have located is an SMT. Okay, so anytime you want to locate an order block, you need to look out for your inducement. Okay, after getting your trend and everything, you need to get your inducement accurately. All right. Okay, and always we said that in the structure marking, I told you that the first pullback, okay, the first pullback or the nearest pullback after the break of structure is your, that has been taken out, is your inducement. Okay, so a low is confirmed in a bearish trend when we take out the nearest or the most recent valid pullback in the market, and a high is confirmed in a bullish trend when we take out the most recent valid pullback in the market. Same way we confirm a break of structure. Okay, we confirm a high in a bearish trend when we break structure. Okay, when we break structure, and we confirm a low in a bullish trend when we break structure above. All right, so now to have a valid change of character, as I taught you under structure, you need to what? You need to have price closing, candle closing below the valid low in what? In the valid low in bullish trend, and then the valid high in a bearish trend. Okay, so that is one thing you should keep at the back of your mind as we go on in this topic, because all those things are going to allow you to understand what we are going to be treating. Now, don't forget that imbalance is also very key in us identifying our key levels or key point of interest in the market. Okay, so if there is an area that you see an OB, but then there is no imbalance, there is no inducement, there is there is no liquidity sweep, then you should know that if you are trading from that area, you are going to become part of the smart money trap liquidity that is in the market. So this is why most supply and demand or smart money, so-called smart money concept traders still fail in their trading. So you should understand this, because majority of these smart money traders always look at putting stop losses at 2 pips, 3 pips, 5 pips, 10 pips. Like, they are always interested in rather small pip loss, stop loss points, instead of looking out for liquidity areas, liquidity sweep, inducement before making entries. Okay, before confirming entries and making entries in the market. They don't do that. Okay, now the reason why they do this is, you see, they believe SMC is all about low risk to high reward concept. Okay, but then identifying the correct structure, the correct break of structure, the correct change of character, and then the inducement is key in smart money concept. Okay, or smart money or trading. So if you're able to identify these things, then you should be able to overcome the challenges of smart money trap in the market. I used to be part of these smart money traps when I was trading supply and demand, because I never understood or I never learned anything about inducement, liquidity during those times. Okay, but this time, after I understand liquidity, I was able to realize my mistakes and my errors in the market. Now, SMC is not just about having 5 pips, 2 pips, 7 pips, 10 pips stop losses, but being able to spot the levels of liquidity in the market so as not to become part of what the liquidity. All right, so stop loss doesn't categorize you as a retail trader or a smart money trader, because retail traders hardly lose trades, but when they lose trades, it's a high loss. Why? Because they always enter a trade and protect their trade by putting stop losses at the previous high or previous low, depending on whether they are buying or they are selling. But OB traders, that is smart money traders who don't understand the major concept of smart money, they are just looking at, okay, I've seen my level, so I've taken it, I'm just putting 2 pips stop loss above or below, depending on whether they are buying or they are selling. And this is really dangerous for you as a smart money trader. Okay, so you need to understand this liquidity stuff. Okay, now you can be an SMC trader and still have an SL of 15 pips. The main thing is that you have been able to spot your liquidity, you have been able to spot your imbalance, you have been able to spot your accurate OB, okay, and also your accurate break of structure, inducement, and all that. Okay, and then you can use any of what the entry time frames, entry strategies that we'll be learning after liquidity to make entries in the market. Okay, so the main thing is you being able to spot liquidity in the market and trading according to your trading plan. And the trading plan is what your criteria meeting, the percentage of your capital you are willing to risk on that particular trade. Okay, so now one thing you need to understand is that liquidity is the backbone of SMC trading. I just want to summarize it that way. Liquidity is the backbone of SMC trading. This is why I am focusing and emphasizing my energy on liquidity more and more and more and more in all our lessons. So guys, this is just introduction. Now let me show you how we can identify this false break of structure, false change of character, and false OBs, which acts as SMT in the market on the live chart. So let's begin. Okay, so here we are on our chart here. So let me see which page is this. Okay, so this is GUH1. Okay, as you know, always we do the theory, then we come and do the practicals on the chart. So let's begin with the practicals for this particular topic. Okay, all right, so now as you can see here, we are on a downtrend over here. So it means we will be looking for selling opportunities in the market. So before then we were on a bullish trend over here, and then trend change into a downtrend. So let's begin. So where is our last high before? Okay, so I'll use by our structural marking concept, this area here is our last high. Why? Because this is a valid pullback over here and is acting as our inducement. So as price takes out that inducement here, we can confirm our high here. All right, so it means that we are expecting that price should continue above, so that we have a break of structure, and then we can have a new low being confirmed by that break of structure. But then that never happened. Okay, that never happened. So based on our our structural marking concept. Okay, based on our structural marking concept, let me delete these guys. Let me move this thing here. Delete this and that. Okay, so this is our high that we've confirmed because of the IDM. Okay, the inducement level here. Let me change this to black. So that is our IDM. Okay, IDM. Let me make this 11. I don't want it big, and this should be now bottom. Okay, so this is our IDM that has helped us to confirm our high. Okay, then now what happens? Retail traders will not know about this being IDM or even it being a valid pullback. They will be looking somewhere here as they are pullback. So they would have marked something this sort. Okay, you would have seen them mark something like this. This would have been their structural marking, and you have the high at the top there. Okay, that would have been their structure that they would have been marking in the market. Okay, without taking into consideration the things we took into consideration when we're looking at structural marking. Don't forget that we base our structural marking on liquidity. Okay, so we're looking at market taking out liquidity and then that validating the pullback. This is why we can use this single candle. And if you remember, I told you that how they call it, the candle color does not matter. Even if it is a green candle and it takes out the liquidity, it validates the pullback in that sense. Okay, well, so this is our IDM confirm high. We were expecting price to go high. All right, go high. So here, since this is a valid pullback here, in terms of candlestick structure, don't forget we learned two types of structure in terms of candlestick structure, but in terms of overall structure, where is our valid overall pullback, where we could have our valid change of character? That would have been here. Why? Because this is a valid pullback, because this candle's low has been taken out. We are in an uptrend here, so this is the area we will be expecting our valid change of character after price closes below. Okay, so let me label this change of character our chalk. Okay, over here. So this is our valid chalk. Okay, let me put it what we learned before. But now retail traders, this is where their chalk is going to be. So they'll start to have a change of character once price closes below this guy. They'll say that is a change of character. Okay, so I'm coming. Let me save these guys. Save change of character, and then IDM. This is our IDM. Okay, save, so that I can just select those things quickly. So they will see this as as change of character. Okay, which is not valid. Remember, because we are not tapping on a higher time frame supply zone here. Remember what I taught you on that structure. If we're to be tapping on a higher time frame supply here, then this will be valid as a change of character. Okay, don't forget that it would have been valid as a change of character. But now, since we have not tapped on any higher time frame supply zone, this is an IDM confirming our high. Okay, Right, so they will see this as change of character, and then because of that, here they'll start looking for their what, their supply zone. Now they'll say this is the last buying candle before this move, so they are going to mark this as their what, their supply. Okay, so their supply zone. And now because this is their change of character, they are marking this as supply. They will be expecting here as their lot, their low. Okay, this becomes their low in the market. We do this blue, so that becomes their low in the market. And next time price breaks this area, they will see it as a change of character. They will mark this as a change of what, a break of what, structure. They'll mark that as break of structure, BOS. Okay, they will be marking this as a break of structure, which from our perspective, remember, from our perspective, there are a lot of things we have to look out for. Okay, and then also there is no candle body close over here, so we cannot have a break of structure here. So they will have a break of structure here, and then because they consider this as a break of structure, let me save this so I can have it in the draft, BOS. Okay, because they consider this as a break of structure, they are going to now look for their last buying zone, which is this. Okay, before they sell, so they'll be looking to what, to sell from what, from this area again. Now as you can see, they are not considering what, they are not considering imbalance and all those stuffs. Okay, so now price reacted, but price didn't go down, price broke through. So this here is an SMT. So this is an SMT. Let me change this to green and this to 11. So this is our SMT, smart money trap, because a lot of them are going to be what, to be buying from what, from that point. Okay, a lot of them are going to be buying from that point. Let me make this center. Okay, all right, so that is our SMT. This is also an SMT, because let me save this so that I need this to be empty. Oh, I think that is the line. So the field, I need it empty. Okay. All right, so they will be considering this. So let me save this as SMT, smart money trap. So this is also a smart money trap area, SMT. Why? Because we don't have a proper break of structure. There is no faking of what, inducement. Remember, for us to confirm a new low in a downtrend, we need to what, take out inducement. They are not doing all these things. They are just marking areas that they feel are supply or demand areas that they can what, that they can buy from. Now because they see this as what, as a low, they will see here as a high. So pay attention here, this will be their high over here. Okay, that will be their high over there. Then what is going to happen? Markets came down, and then they'll consider another high over here and here as a low. So be paying attention to what is happening here. All right, pay attention. Good. So we have our low here, we have our new high here. As you can see, that is per their concept. Okay, which means that the next time price breaks this level, whether liquidity, just a liquidity sweep or just a break, they are going to be considering this as their what, break of structure. But before I come there, let me just say this. You see here, because these they are high, okay, and price broke above this, they are going to consider this as a change of character, because you see we came back into a downtrend according to them. We have, but according to us, this is supposed to be where we have changed into what, a downtrend. But according to normal SMC traders, retail traders and co, this will be a change, a position where they'll say they have changed again from bearish to what, to bullish. So this will become their change of character. Now what is going to happen is, remember I told you there's no liquidity sweep, there's no inducement, so there is no proper or confirmed low in this case. Here there's no candle body close, so we don't have any proper low, but to them we have, so they get induced. Now because they consider here, let me take this guy out for now, let me put him here. Now because they consider here this as a change of character, okay, they are going to be considering this area as their demand. Okay, they'll begin to look at this, the last selling candle before they push up, so they'll be looking to buy when price returns here. Now how do you see price returns here, react, and then we broke through? So this is an SMT zone, okay, smart money trap. So you become part of the liquidity that will fuel market down. So now remember, we only confirm our high because this is our inducement. That is, if we are following our proper way of marking structure, this is our inducement and not change of character. Okay, so now once this happens, then we'll be like, okay, this demand zone has broken, this OB has broken, and price has reversed back into bearish. So they'll come here again and say this is their change of character. Okay, so they'll see this again as a change of what, character. And when that happens, they are going to be marking this guy as their last buying candle before the drop. But remember something here, so they'll mark here again as this particular zone, okay, as their supply, where price will come and then they'll sell. Okay, so they are expecting price to come back here for a sell. But remember, we have not even broken the proper low, because this is the last main low over here. Okay, the last main low over here before this high was formed. Okay, so just a minute. Okay, so let's move on. Sorry about that. All right, so now they are considering here as what, as a supply again. Now we will consider this as a supply if, let's say, after this break, this change of character here, okay, and price did something like this, take up, because this is what, this is let me see where we have our valid pullback. No, so there's no even valid pullback over here either. So our valid pullback, this one also is not a valid pullback, because this is within this guy. So let's see where we have a valid. So okay, we have a valid pullback over here. Okay, so now this guy took out this inducement. All right, this inducement over here, this is our inducement taken out. So now we have our inducement taken out over here. which means that any zone above this inducement, all right, is considered valid. So we have what we call the decisional OB and the extreme OB. Okay, now don't forget, you have to consider certain factors. For instance, this zone here, we have imbalance between it, but the question is this a valid OB? The answer is no, per what we've learned. Why? This candle didn't take the high of this, so this guy here is not a valid OB, but they will consider it as what? As a selling zone. So this is another what? SMT area. Okay, now when we come here, this red guy took the high of this guy, okay, which means that our main OB is this entire guy here. Okay, but if we take the entire body of this guy, it means that this guy has been mitigated over here by this candle. Okay, so now remember, there is an imbalance between this guy and this guy, so we can use the imbalance. Remember, I told you can trade the imbalance as well, so you can use the imbalance area, but remember to follow the rules. Follow the rules. We will be looking at the entry rules, so you follow them. Okay, so this area is kind of like a decisional area, but then not a proper zone to trade from. So this is a 50-50 area. Now this is an extreme OB, which if price return into, maybe in the future you'll be looking to trade from. Okay, so this is our valid OB in this case. First of all, let me see. Yeah, because this candle took the high of this guy, so it's valid. That is a valid OB. Okay, but unfortunately price didn't return to this zone, okay, as of now. So this area here also is an SMT, because these guys will be looking to buy from there, but as you know, that is not a valid OB, because this green candle didn't its high was taken by the red candle there. Okay, and this continues like that. I don't make the lesson very long, so I'm just using this to set the examples for you. So as you can see already, I've shown you they are fake chalks, they are fake break of structure, okay, they are fake or change of character, and they are fake OB areas. But then we have already learned how to identify the valid OBs, the valid structure, the valid change of character, and co. So if you see these kind of levels in the market, you should be able to avoid them. All right, so we will, as we go on, we'll be practicing more of these things on the chart. So today is just the lesson, and then demonstrating to you how you can be able to locate them on the chart. So I'll end today's lesson here, and I'll be uploading another lesson this week again on daily liquidity and weekly liquidity. Then after that, we'll look at session liquidity. So we'll be having about 3 lessons this week. Then I think exams is ending this week, so after this week we can have live sessions also. So thank you guys for watching this lesson. Be looking forward to the next lesson, either on Thursday or Friday. Thank you.